Good morning, everyone. In today's video, I thought it would be interesting to do some live commentary on a trade setup in gold. Gold, for all of those that are in the futures beta for text, we just received the alert that gold is breaching our doomsday aggressive models. So I thought this would be a good opportunity to try and really just walk through the entire setup, and it looks like even adapting to volatility. So with the sell-off here, if we go outside of the clouds, that means we need to adapt to volatility, which it looks like we just broke. So now we need to switch over to the conservative volatility box models. That's the next most conservative model we have after the doomsday aggressive models. And now if I zoom out here, you should hopefully see that this is doing a much better job of containing price action in gold. Now let's talk about the setup first before we move on. Here the setup is quite simple. We need to see price action breach the cyan entry line. Once that happens, we want to see an edge signal confirmation. That's our oversold overbought indicator, and it looks like a green arrow in the case of a long. So now once we have price action breach the cyan entry lines, then we see a green arrow. That's it. The trade is now a go. As long as we have an opportunity to enter at the cyan line or better, that's our entry price, we take the trade. For all those that are looking to try and follow along here, you'll notice that the labels up top also give you the price broken down in a much simpler format. All right, so let me now pause the video here. Let's see if price action in gold actually breaches the cyan entry line, and then I'll resume it if we do have a trade entry setting up here. Okay, so we just had silver breach as well on our aggressive volatility box. So here something should already stand out. That's gold is currently on its now conservative volatility box model, and silver at the same time is on its aggressive volatility box model. So I think that's dichotomy is a little bit interesting here. And if I come back to silver, let me get back to where we're at. All right, so you'll see here prices breached our volatility box entry line. Again, we're looking for that edge signal confirmation prior to going outside of the clouds. That means we need to see a little green arrow here confirming that the sell-off in silver is actually done and we're now safe to actually enter the trade. So if I come back to gold here just to contrast what's happening there, we already broke the aggressive, so let me come to the conservative where we're on. Should notice that so far this is looking like we may actually touch that cyan entry line. Let's actually get both of these charts on the same pane here. So let me create a 2-grid layout and I'll set up silver in this second pane. Let me load in silver, and then we can apply our style and study settings here so they all look alike. So let me apply the volatility box style. And then once that happens, let's switch over to the right model. And now we're taken back where we can actually look at both of these markets on the same chart. So now aggressive has already breached the zone we'd be looking at, the aggressive zone. So if we see a green arrow here, we know the trade is to go there. In gold, we're still waiting for price action to breach that cyan entry line. If it does breach that cyan entry line, that's when we're then interested in looking for that green arrow, and again, looking for a trade. So now let's monitor here, see what happens. And very similar to gold, if in silver we go outside of the clouds, like it looks like we just may, we need to switch over from the aggressive to the doomsday aggressive volatility box models. So far it looks like gold is coming down here, may actually touch the line. Silver's broken out, so let's now adapt in silver off of the volatility, switch over to the doomsday aggressive. Now, very similarly here, if we go through the cyan entry line on the doomsday aggressive, again, looking for the edge signal error to come. If that comes before we go outside of the clouds, that's the model that we can now continue to use and trust, as long as we get an entry better than the cyan entry lines to make a move to that first target at least. Coming back into the charts right now, gold has breached its conservative volatility box entry line, and so has silver for its doomsday aggressive models. So now both of these have breached their volatility box entry zones. The next thing we're now waiting for is to look for that green arrow to come on either of these markets prior to us going outside of the clouds, and then we can actually participate in this trade. So let's now wait for the green arrow. I'll resume the video when we do see it. And then as long as we get an opportunity to enter at that cyan line or better, once we get that green arrow, that's it. We should hopefully be able to track at least one of these two trades if they trigger in this video. So far, it looks like we're respecting these levels. So on silver here, we have the arrow beginning to plot. So as long as this finishes printing here, which it looks like it will, then that's it. That's the green arrow we're looking at. As long as we get an opportunity to enter at the cyan line, which we're still pretty close to, so I expect a retest, boom. That's it. The trade right there is now a go. Let me pause the video here and get in that trade. And then on gold, very similarly, we want to see a green arrow, opportunity to enter at the cyan line or better, and that's it. The trade is a go. So let me pause the video here, and then I'll resume it if we see this happen in gold as well. All right, so quick little update here. So silver has already triggered. We have that first and second target already working. Gold on the left-hand side, we still have yet to see that edge signal arrow. Looks like we're chopping around in between our cyan entry line and the cloud so far. So we need to see that arrow come prior to us being able to actually enter the trade. So gold still open, has not yet fully met the rules. Silver, a trade that's already live. We have that first target, which is where that first blue line is. The second target would be at the gray target line with the break-even stop after we hit the first target. And until that point, you're really just letting the trade work itself. Okay, so now we're starting to see a bit of a edge signal arrow confirmation on gold. So if this green arrow holds here, then this trade will be active and live. So far, it looks like this arrow is going to hold. As long as that happens and we get an opportunity to enter at the cyan line or better, then that's going to be an active and valid trade in which the conservative models are the ones we're going to use to trade. That same target stop, let me change the buffer here as well. The prices are set ahead of time. Okay, so that arrow in gold held. And so now you'll notice we do have the bullish edge signal arrow that's printed. So both gold and silver are now live trades. We already know the levels for silver, that's the blue lines drawn, but for gold, if we do something similar, stop needs to be outside of our volatility box clouds, and the first target is exactly where our T1 price in our label shows us. And what you should notice here is that the first and second targets, the gray target line here, pretty close on gold compared to something in silver, right? So keep that in mind, just an observation. Now we're going to be waiting for gold to try and make a move towards our target, same thing with silver. And in case you're curious about the risk in gold, that's 5.5 points per contract. That's our first target, and that's the bare minimum first move we're looking at. So that's how all of these pieces come together here. All right, I'll now pause the video here and resume it once we hit either the first target or go outside of our stop. But hopefully this entire process has given you an idea of A, how to adapt to volatility, B, how easy it is to really follow this process-driven approach, right? We're waiting for price to breach the cyan entry lines, see the green arrow, that confirms that, hey, we're officially now in oversold territory, and then look for an entry at the cyan line or better to try and get long. All right, so I'll pause the video here and resume once we hit the first target or the stop, whichever comes first. All right, so in silver here, we've hit the first target. Gold looks like it's about to do the same, and then the second target in gold is pretty close by. Silver, the second target's a bit of a more home run sort of target, right? It's a bit further away, where if we do hit that with the break-even stop, that'll make for a really nice trade. So in both of these cases now, so silver, for example, we've hit the first target. Now the stop is at break-even, which means a cyan entry line, and the stop or the second target is at the gray target line. So you can't lose on the silver trade anymore. We've already taken money off the table. We're now looking to see if we can make that stretch move. In gold, that second target's also at the gray target line. We just hit that first target. Stop is at break even, taking money off. And then let me just draw that out on silver as well. So now hopefully this gives you an idea of now how to manage the trade once you have a winner. So the first target was a winner for us. Gold, that was about 5.5 points. Silver, that was about 8 silver ticks. So some money under our belt. A nice start in terms of both of these trades. Now we're going to just wait and see do we hit that second target, which in the case of silver, you'll notice would pay out really, really well if that does happen. All right, so coming back here, in both gold and silver, we ended up hitting the first and second targets, made for a nice day. In gold, that was a positive 1,210 bucks, 5.5 on that first contract, a bit more on the second. In silver, that was a positive 1350 off of the two contracts. That second contract was a nicer winner here, following a very systematic process, right? First target is what we risk. Second target is at the gray target line. Once you hit the first target, stop is at break even, and you really see how high is high for any contracts you have after that. Hopefully this gives you an idea of how to follow a systematic process here. Now, for example, if you hit the short lines, the upper cyan entry lines, we now again be looking at a short once we got a bearish edge signal arrow. And so it's a very systematic process we repeat day in and day out. This should have hopefully given you an idea of how to use the volatility box effectively and trade in a manner that's consistent and at the edge.